Stock market suffered the worst one-day drop since 2008, and the panic, of course, very real.
Well, think about it. 401ks were on the line, and stockholders just wanted to make a move quick, maybe make their own correction. But is that the best move? Joining us today is stock expert Richard Bregman to shed some light. Thanks for coming in.
My pleasure. Thanks for being here.
So we've talked to you a little bit before getting you on the air here, and thank you for being with us. Calm down.
Calm down.
Chill out.
Chill out.
Why?
Don't panic. When you make a decision from a place of panic, it's rarely going to be the most optimal decision. This is a very normal correction within all historical bounds. It's a 7 to 10% drop. That's normal for a market. So you want to stay calm. You want to stay focused on your goals. What are your goals? If your goal is to have some stock exposure, just use this as a reminder that stocks are volatile. They can be volatile. Keep that in mind and keep going.
And we've been on this incredible rally the last few years. People forget when the Dow was 6,500. Now we're weeping because it's 16,000 and some change. So put it in perspective in terms of the larger economic picture.
We tend to have a focus on short-term interest, but investing is a longer-term endeavor. And within the historical context, this is a very small blip. Will it continue? Nobody knows. Will it stop tomorrow? Nobody knows. Keep your goals in sight. And if you are averse to risk, recognize that stocks have volatility and consider whether you should be in them at all or how much should be in your portfolio at this point.
There's always a risk, but you have to be in it to win it.
You have to be in it to win it, but you have to be mindful of the risks involved. And it's not, if you have a short-term goal, if you're retiring sometime soon, be cautious. Be aware that stocks can be volatile.
We saw the high, what May 19th, I want to say 18,312 or something. We saw the high. We don't know where the low is right now.
Don't know.
But the smart rich people, what do? They keep a little cash on the side for times like this, and what do? They don't panic.
They don't panic. They have reserves to put into the market. This is, I don't want to quite say stocks are on sale, but stocks are now essentially 7 to 10% cheaper than they were a week or so ago. So it could be an opportunity to purchase at a lower price. And one of the nice things about 401k plans is that your money typically goes in periodically, every week, every other week. So at this point, whatever's going in right now for this week is going in at a cheaper price than it was a week ago or 2 weeks ago even, or certainly 6 months ago.
And roughly half the country has absolutely no connection to the stock market, not even through a work-sponsored 401k plan.
That's right.
So this doesn't really affect half of America.
It doesn't affect them.
In layman's terms, though, why did we see this 500-plus point drop on Friday?
It's a big drop. The markets were concerned with China devaluing its currency. They're concerned with the Federal Reserve possibly raising rates and what that means. The underlying economy in the U.S. is still solid, and so it's really been a focus overseas, and what does that mean for people who are invested overseas and have been reaching for yield and returns overseas? They're at risk.
We're connected to the rest of the world. That's the thing. We're all tethered.
Rough day, big questions about next week, but as we started, don't panic, chill out, ride the wave.
Don't panic, see where it is, and make your decisions from a place of calm.
Richard Bregman, thank you so much for coming in.
Thank you for having me.
Thank you very much.
Pleasure to be here.